Hello, my friend. Welcome to Brazil for Investors. I'm Luis, and I'll be presenting my point of view regarding Brazilian economics. And is this the right moment to invest in real estate in Brazil? So I would like to share my thoughts here, my point of view. Okay, this is not a recommendation of investment; it's just a point of view. Okay, to share with you. Great. Okay, so I would like to start sharing with you regarding interest rate and inflation here in Brazil. How it's been our market in the last 10 years. For that, we have the central bank uh, calculator. Okay, you can search in Google for central bank calculator, and this is the one. Okay, so I come here to do a new search, and first I will check for prices indexes. So I will choose here IPCA, which is index price for consumer. Is the consumption, is the price of many things that families consume. So it could be rice, beans, food, and any materials used in house. So they use like a list of 100, 200 materials, and they're always checking those prices. And based on that the changes on those prices, they feel they find the inflation rate. Okay. Also, for example, in those lists of in those lists of products, we some families might, for example, consume different products. For example, if you used to eat salmon, that probably is not in that list. So it will not. So if we have an increase in the price of salmon, it would not appear in that percentage. So that percentage is related to this, let's say, most common products bought by the families here in Brazil. Okay, so I'll start putting here from March 2014 to February 2024. That's for 10 years in the past. Okay. And let's imagine that someone had the salary of 2,000 reais back in March 2014. And let's make this correction based on the inflation, this IPCA, which means inflation, and see how much a person would have to receive, to earn a salary today to buy the same products, exactly the same products based on the inflation. So if they bought something with 2,000 reais back in 2014 March, let's correct the value. And right now the person needs to earn 3,550 reais to be able to buy exactly the same products of 10 years ago with 2,000 reais. So we see an inflation rate of 77.5%. So, and for example, a product that was 2 reais, now the price would be 355, right? So increase of 1,550 reais in 10 years. And now let's do a new search. This is the inflation, right? So the price increase of the products. Now let's do a new search, but related to the interest rate in Brazil. Brazil is very well known as like the fixed income country. So the fixed income is, from my perspective, my point of view, is a good way of investing here in Brazil, and I will show you why. So let's start here from March 2014 until 1st of February 2024 with the same 2,000 reais, and let's correct the value. So 10 years, let's correct the value here, and now we see that the interest rate, if we had any investment in those 10 years associated to the interest rate, 100% of the interest rate, we would have from 2,000 reais, it would be 4,809. So it shows us that Brazil is still the fixed income country. So from my perspective, would be better to invest in fixed income than rather than inflation indexes, right? So here we had 140 percentage of increase in that rate during those 10 years, right? And 2,000 reais 10 years ago today invested in 100% of our interest rate, it would become 4,809. So 2,809 of increase. The name of our basic interest rate is Selic, is what is called here in Brazil. So this is our basic interest rate, right? So we saw the comparison during the years, but I would like to show you the graphic, how was the behavior of each of those. So another place that I think it's good to check is trading economics site. We can search for example, Brazil interest rate. Okay, then we can check here in this other screen here. I have already added the Brazil interest rate in the blue line and compared. Here we are able to compare with other. We could put like rate United, let's say interest United States. For example, we would be able United States. We would be able to compare also with US, right? But at this moment, I would like to show you just these two graphics here, right? So the blue one is the interest rate, and the gray one is the inflation here in Brazil. So as you see, from March 2014 until March 2024, the last 4 years, this was the behavior, and you see that most of the time our interest rate is higher than our inflation, right? So if I think from my perspective, usually the interest rate, a normal interest rate, not for the people to take too much credit or to stop the economy. I would think from my perspective, right? Not a recommendation, just my point of view, would be around 6.57 or maybe 8%. Would be a good percentage to keep everything, let's say, normal, not increasing economy and not decreasing, right? So as you see here, we have this difference here, right? Among the years, we found this difference in many situations here. So imagine that you invest in inflation here, and I will come to invest to and I will talk about the investment in real estate if it's a good moment right now, and I'll explain why. But this is the background I would like to give to provide my point here. Okay, so you see here that in Brazil, usually the interest rate is higher than the inflation, right? And you see here for 11 to 6, so around 6% more, right? And what you see here, that when COVID broke in, appeared, right? It was around end of 2019. The interest rate was lowered, and probably that was because there was many things happening, right? Health issues with many people, so there was many problems going on, and probably the government wouldn't like to have an additional issue that would be the economic, so they started providing or offering credit in a very low level. I have never seen actually this level in the past. So very low, 2%. So I would, from my perspective, since I think that 6, 7, or 8 would be the right percentage. I From my perspective, 2% is like is too low. Is like giving money for free, right? Is very cheap. And why this percentage? Because usually Brazil, historically, from my perspective, and comparing with US, is a more risky country, right? Here, our stock market is not that well developed, and maybe that's because um, we have juridical insecurity, maybe, and so that could be the cause of this difference uh, uh, between, for example, and if we look at U.S. Interest rate, I've seen that for many years you are very close to zero, and also I feel I think that many of even young people, they buy, for example, houses for many years because they know that their interest rate is usually very low. But right now, I see that there are some inflation in US, and also the interest rate went up. So you're maybe you're feeling something that here in Brazil is it was kind of normal, like high interest rates for many years. Okay, but yeah, just to mention that probably Brazil has that higher interest rate, maybe because of the risk, right? If someone internationally would choose to have the same interest rate between Brazil and US, probably would be more confident to put in US. So we need to provide more higher rates, return rates, right, for the investor, for them to come and invest here in Brazil. Okay, so and you see here when the interest rate came to 2%, then the credit was very cheap, and many people got the credit and started buying goods, right? And then can see here there right after it came to 2%, then the inflation started to go up, right? So the inflation went up, and right after the inflation went up, then the interest rate had to go up to correct the inflation. So, and you see then the interest rate came up to 13.75%. Can you imagine if you invest 100,000 reais and you get 13.75 thousand per year? So that's a great return, right? So that is really helpful if someone can save that money and invest in that way. Also, you see the difference between inflation. So you can see that, for example, at this point here, if you would get 13.75% in return of your from the fixed income, then and the inflation was 7, so you had like a real return, real income of around 6%, right? So that's pretty good. And can you imagine someone that did put their money in the fixed income here, and now the fixed income start lowering, right? And probably from the last period, I would say, Brazil is spending lots of money. So maybe there could be the expectation that we might need to print new more money in the future. And when we print money, since our richness, like the how rich the countries are, if we print more money, then the money starts losing their value, right? Even the money that we have in the bank in our pocket. So at this point, with the fixed income going down, maybe the people that use it to keep their money here, they might want to migrate to somewhere else, right? And but with the high costs in Brazil and the insecurity, the juridical insecurity, maybe they might not go to the stock market, right? Because the stock market and depends on like the credit very low, but also in juridical securities, and also right now we are having a tax increase, so that definitely would not like help much the from my perspective, right? The entrepreneurship, right? So if the people do not migrate to the stock market, a safe place for them to put their money would be, from my perspective, the real estate, right? So right now, I would expect maybe inflation coming in the next months, in the next period. So this line here, this graphic that what is going down, I would expect this to go up, and at the same time, the fixed income is going down. So at this point, maybe the people start losing money here in the fixed income, and also because the inflation start going up. But if you put your money in real estate is something that the humans cannot produce, right? It's something that is have scarcity, right? So, and that, since it has scarcity, probably the price will go up together with the inflation. We will not lose their value, right? I feel that it's a good reserve of value, right? So at this moment, I would say that maybe it would be a good moment to be putting the money in the real estate here in Brazil, right? So because of that, because tax increase, stock market right now going down, insecurities, juridical insecurities, also fixed income fixed income going down. So for all this because of all of this point of view, all of these points, I would think that right now maybe it would be a good moment to put to invest in real estate. Okay, and for you, if you're an international investor, also for sure you take into consideration the currency, right? The price of real, dollar, or any currency you're using. And but yes, thank you for watching, and please feel free to put your comments here and ask questions. I would like to share with you my point of view here from Brazil. Maybe you would like to learn more. Okay, thank you a lot, and see you later. Bye bye.